Hello everybody, this is Lara from Pure Elliott Wave with your now again Monday to Friday update for Bitcoin, Ethereum, XRP and Solana. Thank you so much for your patience last week everybody while I drove from the north to the south of France. I'm settled down here for about a month, so regular Monday to Friday updates will now resume. Bitcoin is still consolidating in this very boring, time-consuming rectangle, but let's keep our eyes on the bigger picture, people. The larger picture at the monthly time frame is still up. There's an upward trend intact, and it's really normal to have pullbacks and consolidations along the way. Sometimes, as in this time, they test our patience. What's really obvious, though, is Bitcoin is moving sideways. It's not moving down. So this looks like a consolidation within an ongoing upward trend. This does not look like the start of a bear market. I wouldn't be calling for it would be a triple top now, and you'd have to ignore this, you'd have to ignore this. I really don't think we're about to get a downward breakout in a huge bear market. It's much, much more likely this rectangle is going to break out upward. And indeed, rectangles, when they occur in the context of a larger upward movement, 2/3 of them will break out up, 1/3 of them will break out down. So on balance of probability, when it's done, we're going to get an upward breakout. I want to use the 3-day away rule if we do get an upward breakout. I want to see a close above 73,100 on an upward session, which must have an increase in volume beyond the session immediately prior. So we can say it'll have support from volume. And then I want to see 2 or 3 days up and away before I really have confidence we've got a breakout of this rectangle and the larger bullish trend is resuming. Rectangles do have many false breakouts. Here's a false downward breakout. It closed below support at 60,700. I thought we were getting a downward breakout. We didn't. 2 days later, it moved strongly back within the consolidation. So to avoid that in the opposite direction, a 2 or 3 day away rule is what I'm going to apply for that real confidence. Bitcoin is currently hovering around resistance at 71,500 now. We could be this week or next week about to see an upward breakout. 2 or 3 day away rule will apply. Or we could be about to see a downward swing to support at 60,700 to 58,200. It's done it before. It can absolutely do it again. In fact, if it did that, it would really be testing our patience, but it would relieve some of those extreme conditions at the weekly time frame that we're still seeing. For the short term, it is upward sessions which have strongest volume. So for the short term, I will read Bitcoin's volume profile as bullish, but typical during consolidations as price moves sideways, volume is declining. Here's one I think it's a bit of an exciting development to note. One development on balance volume is it now has a technically significant range with lines that are converging. So we will get a signal finally. I don't know when it's going to happen, but it will happen within the next 1 to 3 or 4 weeks. If on-balance volume breaks above resistance, this resistance line has at least 3 tests, and it's long held, it's got a shallow slope. That'll be a bullish signal. I'd then expect an upward breakout either at the same time on-balance volume breaks up or after. Sometimes on-balance volume can break out of a resistance zone prior to, or consolidation zone prior to price, and when it does that, it gives us an advance warning of a breakout from price. Sometimes it breaks out with price, in which case it adds confidence to the breakout from price. If on-balance volume breaks below support and price isn't at support, I'd expect a downward swing to continue to support about 58,200. The support zone has 4 tests and it's reasonably long held. It's very close to horizontal. This has good technical significance. I will be watching this very carefully with interest over the next few weeks. ADX is declining, no longer telling us there's an upward trend. Previously, for the upward swing within the consolidation, ADX told us there was an upward trend here and previous here. No trend indicated at this time. This big consolidation has pulled RSI down from deeply overbought, where it then exhibited double bearish divergence. It's back in neutral. There is so much room to go for the larger upward trend to continue before conditions become extreme again. Money flow is also neutral. ATR continues to decline as price moves sideways. Absolutely normal behavior during a consolidation. This also is another strong indication that this big sideways movement is not the start of a bear market. It's just a big consolidation within a larger bullish market. If this was a bear market, we should see price by now moving strongly lower, and we should see volume pushing price lower and ATR as a measure of volatility increasing as price moves lower. The fact that we're just not seeing that strongly supports the view that this is a consolidation within a larger bullish market, and these present opportunities, people, not times to give up and go away. These are opportunities to settle yourself, calm your nerves, and manage your positions and manage your risk. This is not a time to get concerned about the larger bullish run. Within this big consolidation, prices just very recently reached about resistance. It's now moving a little bit lower. Stochastics got close to overbought, now moving lower. I'd expect a downward swing to continue if this consolidation is not complete, a downward swing to continue to support, and price and stochastics to continue lower to reach close to or at oversold. And if they get there simultaneously, that may be the completion of the downward swing and the start of the next upward swing. Until we get a breakout of that rectangle, let's assume price is going to swing from resistance to support and back again, unless proven otherwise, unless we get a breakout. And I'm still expecting an upward breakout is very, very likely when it's done. The only question is when it's going to finally happen. Technicals for Ethereum, I identified the small pennant pattern in the last time I gave you analysis. We've got a downward breakout, so the pennant has failed. Let's get rid of that. No pennant, and the target I calculated from it, just discard it now. Ethereum reached a little bit below resistance at 4,100, now sitting along support at 3,600. That's previous resistance along here. Not particularly strong, but a little bit of support here at 3,680. If that gives way, look for support at 3,200. For Ethereum also, we need to see an upward breakout beyond the high of 11th of March in order to have confidence that the next bullish run really is underway. This upward session here with a bit of a follow through approached what was resistance at 3,680, moved up and away, back testing of support, still testing support before it's moving up and away. That would be the most common behavior for price at this stage. It could move back below here though and test support at 3,200. But these strong upward sessions had really good push from volume and a strong increase in range. Volatility and volume favors the upside. Ethereum is still in, for the bigger picture, an upward trend, and it's normal to have consolidations and pullbacks along the way. After strong upward movement, price is now consolidating and overall volume is declining. For the very short term, strongest volume is on a downward session, suggesting we might get a little bit more pullback here to 3,200 before this pullback is finally done. There's a small range on balance volume for Ethereum. The upper resistance line has very weak technical significance. It's got a reasonable slope. It's short held and there's only 2 tests. The lower support line has 3 tests, is short held, but it's close to horizontal, so a bit of technical significance here. Watch for a signal with a breakout in the next few sessions. ADX is declining. There's no clear trend for Ethereum at this time frame. Because ADX tells us there's no clear trend, I'll revert to a model of stochastics using support and resistance. That would expect a downward swing to support, maybe about 3,200 to continue until stochastics reaches oversold simultaneously, and then the downward swing may end. For a long time, this has been my Elliott Wave count for XRP, and I was expecting this little second wave correction to complete. This is getting a bit squished up. Let's now expand it out and have a look at what's happening. So the very short term for XRP, I had expected this triangle to complete for a little B wave. I'm labeling minuet B, and then wave C to move below the end of A to make a new low below 0.4788 by a little bit, not too much, to complete this corrective structure for a second wave, which is a zigzag A, B, C. So far, that's exactly what happened. We've got a really bullish long lower wick for the 7th of June, strongly suggesting that that low, at least for the short term, is going to remain intact. Here's the risk, here's the invalidation point for this wave count. If 2 continues lower, it may not move beyond the start of 1 below 0.4309. But I'm having a little bit of trouble trying to figure out exactly where's the best place to see the completion of this triangle. I think this is probably the best, but I'm a bit concerned that subnuet wave E is so very brief. You really would want to label it complete here, but here's the problem. You'd have to then put D over here, and D would have to subdivide, which is probably going to be the double zigzag within the triangle. So let's have a look at that. So you'd have a quick zigzag for W, X, and Y. Now Y, here's the problem. Y has not ended beyond the end of W. Now, that doesn't break an Elliott Wave rule, and it's not actually termed a truncation because the word truncation only applies to where fifth waves and C waves end, not Y or Z waves. But it has the same effect as a truncation because the second zigzag in a double should move beyond the end of the first far enough so that the whole structure doesn't have a sideways look like this. It has a counter trend slope, so it should have a downward slope. It doesn't. It's sideways. It doesn't look right. It's possible, and this is the best place, I think, to see the triangle complete, but I'm just outlining the problem within it with the end of this move here. If this had moved just a little bit lower, that would have been perfect, and I would be really happy with this triangle complete here. If the triangle is complete here, then C is a short, sharp downward movement, a little bit shorter than A, but kind of close to equal, not too far off, and it has a really good look for the zigzag, for the bigger picture, for minute wave 2 to see it complete down here. If it does continue any further, and minuet C certainly could continue further, it may not move below the start of minute 1, below 0.4309. And this is why this risk is so important. If you see the triangle complete here, now you're seeing minuet C as a 5-wave structure, an impulse with 1, 2, 3, 4, and we need a fifth wave down to end beyond the end of the third to avoid a truncation. So we'd expect one more low below 0.4565, and this is the price point where we can discard this labeling. 4, if it continues, may not move into wave 1 price territory, so a new high by any amount at any time frame above 0.5079 tells us that this is wrong and this is right. So using that Elliott Wave rule, we can say that a new high above 0.5079 gives confidence in this labeling, which tells us we can have a little confidence that this pullback is complete and a third wave up is then underway, and we would have that confidence while the third wave would be in wave 1 price territory. Now I'm going to tell you why that's a really important Elliott Wave rule. If minor wave 1 is subdividing as an impulse, then it will be 1, 2, 3, 4, 5. The third wave may only subdivide as an impulse. It must move beyond the end of the first wave, and then the fourth wave, this is the rule, the fourth wave may not move into wave 1 price territory. Hypothetically, if you were to enter any trading position within an impulse while price is within first wave price territory, you can hold that position throughout the impulse of the third wave and throughout the fourth wave correction to capture the gains of the fifth wave, to get the end of the entire impulse. You can use that Elliott Wave rule to do it, and I'm using the same Elliott Wave rule to calculate this price point from that little alternate labeling I showed you. This is where we can have some confidence. I hope that makes sense. That's one way you can use those Elliott Wave rules in your investing and trading, and I'm using that for my investing purposes. I've entered my long-term positions looking at the monthly time frame while price is still within first wave price territory. I'm going to hold it throughout the third wave, wait out the fourth wave correction to get the gains of the fifth wave. It's important to consider getting gains of a fifth wave in a cryptocurrency because the fifth waves, not always but most very often, are the longest, strongest portion of movement, particularly a fifth wave to end a third wave 1 degree higher, not necessarily a fifth wave to end a first wave. This is where it might not work, but it's most likely, extremely likely to work for a fifth wave to end a third wave. I am expecting intermediate wave 5 of primary 3 to be longer in terms of price distance travelled and so potential profit than intermediate 3, and to get that gain in a fraction of the time compared to the third wave. This is where you get the vertical upward movement of cryptocurrencies. Technicals for XRP, there's an ascending triangle. We have a downward breakout, not an upward. They are most likely to break out upward. This one hasn't. They don't all. So let's calculate a target from the triangle width. The target from the triangle width would be 0.3762. That's actually quite low, and so in order to have confidence in that target, we really need to see support at 0.46 broken first. I don't have a lot of confidence in that target, and I'm going to show you why when we get to other technicals. XRP is still with resistance at 54.55 cents. It's just been unable in the last few weeks to break above that and stay above. Because it's had this false breakout back here, I'm going to apply a 3-day away rule. If we see a close above 55 cents, I want to see 3 days up and away above that before I really have confidence that area has been broken. Next resistance would be 60 cents. Support currently holding at 49. Support below is at 46. A little overshoot from that on the 7th of June. Price quickly returned back to support at 49. A little bit of a push from volume on the 7th of June. The volume volume profile for XRP is inconclusive. Upward and downward volume sessions are about even. Price is moving sideways within the triangle and volume is essentially light and flat. The downward breakout from the triangle on balance volume happened at the same time as that downward breakout on the ascending triangle on price, so this adds confidence to a downward breakout. There is a downward trend indicated again for XRP, so we should expect price to continue lower toward that triangle target. I don't think we're going to get there though, and this is one reason why. RSI reached oversold on the 13th of April. At the daily time frame, it doesn't tend to do that very often, and when it does, it tends to be associated with lows that are sustained for the long term. So I don't expect new lows below 13th of April as very likely. And the other thing that would be a bit concerning for a bearish case is not only is volume relatively flat, but ATR as a measure of volatility is still declining. There's just not a lot of strength in this downward movement. It looks like a pullback within an ongoing upward trend. An interesting development for Solana over the last week. I have 2 Elliott Wave counts. This is the main, this is the alternate. It's invalidated. 4 may not move into wave 1 price territory. This wave count's invalid, which now adds more confidence to the main Elliott Wave count, which, as I've previously said, has a much better fit in terms of Elliott Wave. So for Solana, I'm now expecting a downward swing to end at least at or below 119.38481. and most likely to find support about 115.591576. That's the 0.618 Fibonacci ratio of primary wave 3 with a log function applied to it. This is not the arithmetic ratio. A log function's been applied to account for the extreme volatility of cryptocurrencies. It's the only markets that I'll apply a log function to the Fibonacci ratios. So now I have a little bit of confidence in this Elliott Wave count. Well, from Elliott Wave perspective, this is what I'd be expecting. Let's have a look when we get to technical how likely I think it really is. We'd be expecting a third wave at 2 degrees now down for Solana, so we should be starting to see an increase in downward momentum with push from volume and an increase in range to the downside for minute 3 within minor 3. Intermediate C must subdivide as a 5-wave motive structure because the structure here for primary 4 is a zigzag. That's the most common corrective Elliott Wave structure. A zigzag is labelled A, B, C, and a zigzag subdivides 5, 3, 5. So C has to be a 5, most likely an impulse. So far it may have 1 and 2 complete. Now 3 needs to be an impulse. 4, a little bounce, may not move into wave 1 price territory, and then 5 to move beyond the end of 3 to avoid a truncation, and C to move at or beyond the end of A to avoid a truncation. Truncations are where the 5th wave or the C wave fails to move beyond the end of the 3rd or the 5th wave, and they are very rare. Don't accept any Elliott Wave work you see online that uses a lot of truncations. That's one of the few things I look for when I'm judging the quality of other Elliott Wave work I see, because there is so much rubbish out there. If you see Elliott Wave work that has a lot of truncations, the analyst is probably conforming their Elliott Wave analysis to fit their bias. You have to meet all the rules and as many as the guidelines as you possibly can in order for your wave count to have the highest probability. Technicals for Solana, it's still moving sideways. It broke support about 159. Maybe we need to move it down a little bit to 157. So it's moving sideways with resistance about 175 and support now about 157. We need to see a breakout of this little consolidation to have confidence in the next direction. So far, this looks like a counter trend movement within a larger upward swing. For the short term, Solana's volume profile is bearish. It is bearish sessions which have strongest volume. There's a little bit of support to the Elliott Wave count there. On balance volume has a range with yellow resistance, purple support. These lines are converging. We will get a signal. No signal yet, but this is one to watch this week for Solana. ADX is at a really low level. It's below 15, so it's too low to indicate a trend, but it's pretty close to 15 today. If it reaches 15, it'll have a positive slope, and the negative DX line is above the positive. That would give us a really strong bearish signal. If that happens in the next couple of days, that'll offer quite strong support to the Elliott Wave analysis. ATR continues to decline as price is moving sideways and a little bit higher, so there's not a lot of strength in that upward movement. The model of stochastics plus support and resistance for this market, which because ADX is below 15, there's no clear trend indicated, isn't really working that well. Stochastics reached oversold, price was at support. Stochastics didn't reach overbought, price did reach resistance, but stochastics is now, it's whipsawing, so that model would probably expect overall an upward swing to resistance and doesn't support the Elliott Wave count. But this is a big strong whipsaw, so like this, we could be getting a very choppy overlapping upward swing that still doesn't support the Elliott Wave analysis. That's it from me with your update for Monday, and I will see you all tomorrow on Tuesday.